The Federal Reserve credit created during the last 8 months has not stimulated economic growth in technology or the industrial section, but a lot of it ended up in the expanding real estate bubble, churned by the $3.2 trillion of debt maintained by the GSEs. The GSEs, made up of Fannie Mae, Freddie Mac, and the Federal Home Loan Bank, have managed to keep the housing market afloat, in contrast to the more logical slowdown in hotel and office construction. Not only will the Treasury loan to the GSEs if necessary, since the line of credit is already in place, but if necessary, Congress will surely accommodate with appropriations as well, just as they did during the savings and loan crisis of the 1970s. After the NASDAQ collapsed last year, the flow of funds into the real estate accelerated. The GSEs accommodated by borrowing without restraint to subsidize new mortgages, record sales, and refinancing. It's no wonder the price of houses are rising to record levels. Instead of the newly inflated money being directed toward the stock market, it now finds its way into the rapidly expanding real estate bubble. This too will burst, as all bubbles do. The Fed, the Congress, or even foreign investors can't prevent the collapse of this bubble. Price inflation with a major economic downturn will decimate U.S. federal government finances and exploding deficits and uncontrolled spending. During the next decade, the American people will become poorer and less free, while they become more dependent on the government for economic security. Agitation from more class warfare will succeed in dividing us domestically. And believe it or not, I expect lobbyists will thrive more than ever during the dangerous period of chaos. I have no timetable for these predictions, but just in case, keep them around and look at them in 5 to 10 years.
Thanks for being here, Peter. I want to start with you. Although there are more and more people saying that the U.S. economy will be in a recession next year, it is still a minority position. Why do you think that a recession is coming, and just how bad is it going to be?
I think it's going to be pretty bad, and whether it starts in 07 or 08, I think is immaterial. And I also think it's going to last not just for quarters, but for years. When you see the stock market come down and the real estate bubble burst, all that phony wealth is going to evaporate. And all that's going to be left is all the debt that we accumulated to farm. We can't keep accumulating debt. We just can't put this consumption on a national credit card and assume that just because a crisis hasn't happened yet, that it's never going to happen. A lot of people today in the real estate market have the same idea when I tell them that property prices are going to drop 50, 60, 70, 80%. They don't think it can happen. They don't think the government will let it happen. Well, it happened in the stock market, and it's going to happen in the real estate market. There's very little difference. And basically pushed off this recession until maybe starting in 2007. But it's going to be far worse as a result of all the unproductive debt that has been accumulated during the last 7 years. Coming back to where we are as an economy, we had the real estate bubble that blew up. Americans took on a lot of debt. We spent a lot of money. Where are we now? Well, over the next year or two, you've got about $2 trillion of adjustable rate mortgages that are going to reset. Now, how does the lending industry work today? Well, you've got this huge moral hazard built in, and a lot of it was created by government and the guaranteed mortgages of Fannie Mae and Freddie Mac. But what happens is you've got a whole bunch of people in this room that are lending money. But when you lend the money, does anybody in this room keep that loan? No, it gets sold. It gets repackaged, and these other companies buy them. And then they repackage them again, and they get sold to Goldman Sachs and Morgan Stanley. That creates these collateralized mortgage obligations, or they sell them to Fannie Mae and Freddie Mac that just buy them if they're conforming loans. That 65% of the subprime mortgages that are issued get a rating at AAA. How can that be? Because it's going to be too expensive. Rates are going to rise, and the bottom is going to drop out of the subprime market. And of course, the subprime market is at the margin determining home prices. So everybody wanted to buy and nobody wanted to sell, so prices went up. Well, what's going to happen? All of a sudden, nobody wants to buy anymore. Who wants to buy houses when they're falling in value? People are going to be completely amazed at the prices that houses are going to be selling for in a few years. amazed.
Peter, go for
Most of the profits that people have in real estate are going to vanish, just like the profits in the dot-coms in 1999, 2000. It's a fantasy. People can't sell their house. The inventories are exploding all over the country. Houses are on the market for 6 months a year. There's no bidders. The price is going to fall through the floor. You guys are deluding yourself to think out lower.
Do you see a recession?
I do. I mean, I see a very severe recession. It's not going to be measured in quarters. It's going to be measured in years. There's a very good chance the recession will start in 2007.
And the economy is getting weaker. There's no doubt about it. We're in a recession. It's going to get much worse, which means that the deficit is going to get a lot worse. And I'm predicting within a couple years, it will not surprise me one bit to see the national debt, the national obligation for future generations, to rise in 1 year of $750 billion.
But subprime is tiny. Subprime is a tiny blip.
It's not tiny, and again, it's not just subprime. It's the entire mortgage market, right?
All right, well, Tracy, you're disagreeing.
You're simply wrong. Well, you're simply wrong about that.
No, I'm not.
No, that's not true. For the last 5 years, we've had the best housing boom for the last 5 years that we've had in the history of housing.
Look at all the home builders today. Almost every home building stock made a new 52-week low. These stocks are down 80, 90%. Many of them are headed for bankruptcy. These builders overbuilt. They misread the market. These numbers mean nothing. We're still closer to the top in the housing market than the bottom. We've got a long way to drop. Prices are going to fall substantially, particularly in California, in Florida, in the Northeast.
All right, how much further drop, Peter?
We're going to wipe out all the gains that took place from 1999 till the peak, and I think housing prices in the bubble states are going to be below where they were at the beginning of the decade.
As long as they're buying treasury bills and buying dollars, that's the last bastion, and there's no justification for it. Who wants to buy a treasury bill for 10 years and take it out in 10 years and think they're going to have value? If I were betting, I'm not saying, well, I don't think it's going to happen for 3 years, so I think this is a good time to buy stocks. That'd be the last thing I would think. And so I've sort of prepared in my mind that we could have this bigger crisis.
Bond funds, bond mutual funds, have taken on a tremendous amount of money in the last couple of years. I mean, and now you've got most Americans buying bonds instead of buying stocks. They're making a major bet. And that's one of the reasons that bonds are so overpriced, is because America, I think that this decade is going to be the worst performing decade in the history of bonds, despite the fact that you have Americans in record numbers putting their money into the bond market.
It's impossible to predict the time when confidence will be lost, but it can come quickly. Resorting to buying other paper currencies will not be of much help. When the dollar crashes, most likely the purchasing power of all currencies, since all currencies hold dollars as a reserve, will go down as well. This means that dollars and other currencies will go into buying consumer items, precious metals, and other physical properties. Consumer prices will soar, as well as interest rates. The central bank will lose control, and the more they inflate, the worse the confidence becomes. The interest rates will respond to these efforts by rising sharply. If the Fed tries to reverse the run on the dollar, interest rates will also soar, and the pain on the American citizens will be of such proportion that political chaos will result. Either scenario leads to political and social chaos, the third event, and the most dangerous. With no ability of the federal government to fund its commitments, international or domestic, major changes will occur in our system. The social unrest will elicit cries for government to exert unusual force to head off a complete breakdown of law and order. Signs abound that angry Americans are now more ready than ever before for a change in direction that is indeed real. If this program were improvised, even suddenly and dramatically, the adjustment, though significant and to a degree somewhat painful, would be much shorter and of minor consequence compared to the chaos and poverty that will result if we refuse to change our gluttonous appetite for a free lunch.
But as interest rates start to rise, that's going to increase the cost of paying interest on all the bonds that are held overseas, and that, together with a rising trade deficit, is going to make the current account deficit skyrocket. And I thought it was very interesting that the one big drop, or the one bubble bursting, that the Fed did not ask the banks to stress test was the bond market. What about asking the banks to figure out what would happen if bond prices plunged and interest rates soared? There is no way these banks would survive a big spike in interest rates and a weakness in the economy and other asset prices. higher interest rates are not only possible, they are extremely probable. I think before too long, people are going to start to appreciate that this is a phony recovery, that the rally in the stock market is simply a reflection of inflation, not economic growth. And as bond prices begin to move down, the Fed is going to be under increased pressure to announce QE3. And when it does, that will be music to the ears of the gold traders. But the market that is on the verge of collapse is the bond market and the dollar. And in order to prevent that from happening, the Fed is going to print a lot of money, and that will put a floor beneath asset prices, but it will basically put a rocket ship beneath gold prices, and it will sink the dollar. The structural imbalances that led to the housing bubble, that led to the financial crisis, are being exacerbated, not alleviated. Everything the Fed has done, everything the government has done, is making our economy worse, not better, and the data points show that.
You.
I take it you don't like treasuries?
Pardon me?
You don't like treasuries?
Oh, boy. I guess that's where you go. I mean, look at these trillions of dollars that go into treasuries. And of course, but who buys a 30-year bond as an investment? Oh, yeah, I want to take care of my kids. I'm going to put it in a bond. And I'm going to
United States.
I would concede there's still an illusion and a trust in the U.S. dollar. It's still a reserve currency. But what happens if they start pricing oil in something other than dollars?
And what are they going to price that in?
Well, somebody might come up with another currency. Other countries are now getting together, 4 or 5 countries. They're talking about using something else. And what if somebody comes up with a gold-backed currency and somebody says, hey, this is a better idea? Once you get more rampant price inflation, people may opt. No, I think the dollar is destined to lose its reserve status, and this will change the whole world.
Over what period of time?
Yeah, when's it happen?
Well, that's one thing you can't predict, but I'll bet you that I don't. It could happen anytime because the foundation is gone for the whole system. Could be 5 years, could be 10 years, but it'll eventually be replaced.
Well, that's what I'm wondering. I mean, do you foresee a situation in the U.S. in which it will get to that, in which we'll get to rioting and protesting in the street?
Most likely. I mean, I think it's going to get pretty ugly here when I think we have even more people unemployed, but we have escalating and maybe even skyrocketing prices for things like food and energy. And if the government makes the mistake of putting in price controls, which, I wouldn't put it past them, and then we have shortages of energy and basic food products, people aren't going to take too kindly to that. I mean, they don't like austerity in Greece. Americans aren't going to like it here either, especially since I think we're going to get a bigger dose of it. But he played it badly, and now the hand is even worse. He promised to change the policies that created the problem. Instead, he expanded on those very policies. All we got is more of the same, only in bigger doses. And so he's inherited a bad situation, and he's made it a lot worse. And unfortunately, we are staring at a much greater economic crisis coming soon, probably in the next few years, than 2008.